Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
April 20th, 2026. Markets are open. They are not hitting all-time highs like they were on Friday, but they're not far from it. As someone said in financial media this morning, 13 steps forward, half a step back. 13 up days, 13% move, half a step back today. Nasdaq's down 0.5%. The Dow's down fractions, 10 basis points. And the S&P 500 is down 0.33%. It's still early. We do have a looming deadline for peace talks tomorrow. Will Trump extend it 2 more weeks? He's saying nope. Get ready to see bridges and buildings and bombs all burst together. That's a little stressful, a little anxiety. At some point in time, the boy who cries wolf, there's really going to be a wolf there. That's the thought. I don't know if that's true or not, but that's the thought. Russell 2000's up fractionally. Gold is down 1% to 48.19. Bitcoin is down 40 basis points to $75,555. Oil's up 5%, up $4 to 87.08. Way better than where we were 1 week ago. But still, that's going to become problematic. That's a big number. Psychedelic drugs makers. Let me try to say that again. Psychedelic drug makers jumping today as Trump is fast-tracking the FDA reviews. So there's companies like Definium Therapeutics, ticker symbol DFTX, up 15%. Compass Pathways, ticker symbol CMPS, up 26%. GH Research gaining 19%. Inveric Biosciences, ticker symbol ENVB, up 7%. Cybin, which is ticker symbol HELP, HELP, is up 15%. There's some post-traumatic stress disorder, depression, addiction. These are health conditions that psychedelic compounds are being studied for to see if they can help. Long-term depression, LTD. There's a drug called ibogaine. It's derived from a shrub native to Africa, and it's classified as a Schedule I substance in the United States, meaning it is considered to have no accepted medical use. RBC analyst Brian Abrahams said the signing of the executive order this week with Joe Rogan is a substantial step towards diminishing regulatory risk for psychedelic drugs. I think that's the most interesting kind of like non-business story out there today, because it's going to fast track, but it's not going to, how shall we say, solve those problems overnight. So President Trump is saying in an interview with PBS and with Bloomberg that lots of bombs will start going off if Iran ceasefire expires. Earnings season continues in full force this week with United Healthcare, 3M, and GE Aerospace delivering results tomorrow, followed by Tesla, IBM, and Boeing on Wednesday. Intel, Blackstone, and SAP report on Thursday. Procter & Gamble and Colgate-Palmolive show their cards on Friday. Obviously, Tesla has a lot to show. Their stock has been down 8 weeks in a row until last week when it snapped that. What will they show us with robotics? What will they show us with cyber cabs, cyber taxis, robo-taxis? What will they show us? We know that an embarrassing report came out that 1 in 5 cyber trucks were sold to SpaceX, another one of his own companies. Otherwise, those numbers would have been horrifically bad, which they were. They would have been more horrifically bad. Kevin Warsh, President Trump's nominee to take over as Federal Reserve Chairman, is scheduled to appear before the Senate Banking Committee tomorrow. Even if that hearing moves forward, North Carolina Republican Senator Tom Tillis has pledged to block Warsh or any Fed nominee from advancing to a full Senate vote until the federal investigation into Jerome Powell is halted. Powell's term ends as chair on May 15. Fun time if you like playoffs. The NBA and NHL started their first round playoff games over the weekend. The 130th Boston Marathon will be run today. The London Marathon will be on Sunday. China had a big marathon, half marathon this weekend where a robot beat a human for the first time ever. And it was autonomous, so it didn't have like drivers helping it. The NFL draft is going to be on Thursday. It's going to conclude on Saturday. U.S. retail sales data for March will be released tomorrow morning. Earth Day is Wednesday, which I don't think a lot of people in the late 80s and 90s, it was a thing. There was concerts for it. And now we're just let Mother Earth die or whatever we are. Warner Brothers Discovery shareholders will vote on whether to approve Paramount's acquisition on Thursday. Netflix is releasing an animated spin-off Stranger Things Tales from 1985 on Netflix on Thursday. Michael Jackson biopic Michael moonwalks into theaters on Friday. Year-to-date, oil's up 48%, silver's up 16%, gold up 13%. I want to circle that for you. Crude's up 48%. That's problematic. But last week, the markets had a great week. The Morgan Stanley Country Index All World up year-to-date 5.9%. Magnificent 7 up 1.6%. Russell 2000 up 10%. Nasdaq up 5%. The S&P 500 up 3.9%. And the Dow Jones Industrial Average up 2.2%. Markets are moving lower this morning as geopolitical volatility takes center stage after last week's rally. There's some lingering concerns after an escalation in tensions between the United States and Iran over the weekend. The U.S. seized an Iranian-flagged cargo ship, and President Trump threatened another wave of bombing strikes if a deal not achieved. That's playing into markets this morning. Trump told Bloomberg just a couple minutes ago that it's highly unlikely that he will extend the current ceasefire if a deal is not reached this week. And for that matter, he sent J.D. Vance back to Pakistan for talks, and yet Iran says we're not going. As for stocks themselves, action is mixed at the sector level today. Momentum has come out of mega cap and tech names, momentarily stalling there, but they're getting ready to ramp up earnings next week. Things that are affected by the high price of oil, like cruise lines and airlines, are underperforming. Morgan Stanley expects Apple to report quarterly earnings per share of $2.02 on revenues of $110 billion. Those numbers are above the street consensus. Talking about the memory shortage, it's pretty well known. So is Apple's ability to mitigate it. Morgan Stanley estimates for the next quarter are better than feared. Analysts kept their $300 price target and buy rating on Apple. Now, there's another company called Monness, Crespi & Hart. Their analyst, Brian White, said Apple. He has a buy on at $270 target. He talks about it taking the second quarter stage next week on the 30th, so 10 days from now. Apple will host its Worldwide Developers Conference in June 8th through the 12th. There will be a keynote on June 8th. Apple is innovating with industry-leading products supported by a powerful digital grid and ramping Apple Intelligence. Regulatory headwinds persist. Tariffs remain a wild card. Component prices are on the rise. And the macro looks treacherous. He's looking for growth to hold steady at 16%. He believes Apple will meet revenue estimates, and that revenue growth with a gross margin will be about 48 to 49%. So revenue growth of about 13 to 16%, margins of 48 to 49%. Microsoft, also in the news today. Some thoughts about their quarter from Evercore ISI. Kirk Materne, he highlighted, we believe third quarter results are all about building momentum into the fourth quarter and into the second half of the year, when new capacity should start coming online for Asia. Removing the broader apathy towards Microsoft this quarter is possible, but outside of major upside in Asia growth, we view this more of a survive and advance print. This quarter, they're looking for Asia growth at the high end of guidance against a 4% tougher sequential compare. Should be good enough in their view. From a guide perspective, with the compare getting another 4% more difficult in fourth quarter, they expect guidance range of about 37%. Assuming capacity starts coming online 6 to 9 months after a big surge in CapEx, we believe a high 30% guide for the fourth quarter keeps open the possibility of potential acceleration in the second half. They want to get an update on capacity. There's been recent reports Microsoft has taken on Stargate capacity in Texas and in Norway. The company has also announced new capacity coming online in Denmark, with material investments in Global South and a new region in Saudi Arabia coming in the fourth quarter. Some more questions that they have is, can Copilot co-work move the needle on driving more usage, effectively monetizing Copilot. Copilot Cowork represents a meaningful evolution from assistive AI to autonomous digital workers. They're looking for comments on CapEx for 2027, considering the current pace of growth is about 67% for 2026. A soft guide would insinuate that CapEx growth is peaking, would be helpful in getting value investors back on board. Finally, any early thoughts on 2027 operating margins? So analysts are telling us what they're looking for. The same firm, Evercore ISI, Mark Lepacius, is talking about Texas Instruments. He's saying, I'm a buyer into the print. Interesting. He thinks Texas Instruments is ranked second by investors as top analog MCU long into the first quarter earnings. PE remains elevated at 40% above relative premium versus median. He sees it outperforming the S&P 500 by 17% since the fourth quarter and 23% over the last 6 months. Texas Instruments remains his long-term top analog pick. Based on data center revenues now at 10% of total manufacturing strategy, Texas Instruments makes 80 to 90% of its own chips across a global physical plant versus 50% for peers. He sees robust free cash flow, share growth. That's a pretty bullish call. Tesla's getting an upgrade today. Price target to 350 from 300 at Jefferies, but they're flagging widening vision execution gap and rising funding concerns ahead of first quarter results. Let's talk a little bit more about Tesla. Tesla is expected to report earnings on April 22nd, Wednesday. Their EVs have fallen behind in cost and technology to Chinese firms like BYD or Xiaomi. Ford CEO famously drove a Xiaomi car for 6 months. He said he would have driven a Tesla, but they didn't have any updated vehicles. Cybertruck is a flop. 1 in 5 Cybertrucks were sold to SpaceX. Tesla's getting in new semiconductors ready called A15 chips, designed for future EVs, massive training clusters, and Optimus robots. Tesla has ambitious plans to fabricate chips at its upcoming multi-trillion-dollar Terafab facility that we're going to want to hear about. Where's that money coming from to build? The company is also expected to give an update on its self-driving cars, full self-driving cars, and robotaxi efforts. Tesla will surpass 10 billion full self-driving miles shortly. It's quite an accomplishment. A lot of data there. Many people in the industry still believe they need LiDAR to make their vehicles safer, as they had a pretty big mishap over the weekend in Texas. An update on Tesla's fledgling robotaxi service is expected. Currently, only Austin, Texas, and San Francisco Bay Area are offering services, but with safety drivers in most of the vehicles. I hear one vehicle does not have a safety driver in both Austin and San Francisco. That's not acceptable. He's overpromised, he's underdelivered. I have a problem with that. But the Tesla bros they can't get enough of them. I'm going to take a break here, but I'm going to come back, talk a little bit satellite technology. Big news there. Big news on Meta, Marvel, and Google. We'll talk about what the last 3 weeks in the stock market means for the next year in the stock market and much, much more. Later in the show, I'm going to be talking about the 10 things that the 10 years out from retirement and what I've been doing, because I'm considering myself 10 years out. I'm about 5 years out realistically when the average American starts to retire. I'll give you an update on that. Stay tuned. You can always find me online at robblackshow.com. You can sign up for my newsletter, which gives you updates on my free events that I put together. You can sign up for that at robblackshow.com. That's robblackshow.com.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
So as the day has progressed, it hasn't really gotten better or worse. Same story. Russell 2000's up about a third. The Nasdaq's down about a half a percentage point. The Dow's down about 10 basis points. And the S&P 500's down about a third. It has the vibe of let's wait and see what happens with the ceasefire. Does it get extended next week or tomorrow? Does it get extended for a couple weeks starting tomorrow or not? We are in earnings season. Names like United Healthcare has made a nice move in recent weeks heading into its first quarter report. It's still working through a year centered on stabilizing performance and tightening execution across its businesses. Key focus on their earnings tomorrow will likely be whether elevated medical costs, particularly in Medicare Advantage, are staying within the range that they've planned for, and whether its push to reprice products and prioritize profitability is translating into steadier margins. There's expected to be some encouraging commentary around medical costs, profitability, and the Optum execution could help support the shares and reinforce confidence in a broader recovery effort. On the other hand, signs that utilization remains hotter than expected or a more cautious tone around margins and the path to improvement could weigh on sentiment. The better than feared final 2027 Medicare Advantage rate update also helps the longer term backdrop, but investors will likely still want clear evidence of stabilization from the company in 2026. The broader market's just modestly lower today. Tech heavy is down the most 0.5%, but they've had an amazing run. Taking a look at some of the names, you're seeing names like Amazon down 3%, just off its all-time high, down about 1.5%. Nvidia's down 2%, down 1%. Broadcom's down 8%, down 2%. So companies that had big wins last week, 5 to 10% higher, are shaving some of that off this morning. I don't think it's anything to get upset about, especially in light of we're taking a cautious attitude into the print out of Iran and negotiations. I wish I had a good vibe for you on that, and I just don't. So, May 1 is coming up. It's time to commit to colleges. A lot of happy families when their kids finish high school and commit to college and or not. But finishing high school is a big thing. Once was the golden ticket, like degrees like computer science are starting to become obsolete. Average college costs are growing 3.4% this year for a public 4-year out of state, $31,880 or $124,000 for a 4-year degree. Private college cost increased 4% to around $45,000 per year. That's $180,000 for a 4-year degree. Rapid advances in artificial intelligence are reshaping expectations for entry-level jobs. Recent graduates are having trouble getting their first job. The unemployment rate's at 5.8%. There's something called the underemployment rate, which is 42.5%. And you might think that underemployment means that you're only working 30 hours or 20 hours a week instead of 40. That's not quite right. It's roles that do not actually require a degree: retail, hospitality, or administrative work. So a lot of kids with graduate degrees are doing work in industries that don't need a degree. Full-time placement, only about 30% of graduates are securing full-time jobs. Average loan debt for a student now is $39,457 at graduation. Alternative programs like 2-year degrees, trade programs, and military have become more AI-proof. Community college paths have become more normalized, which is good. Thursday, or later this week, we're going to get Tesla's earnings. A lot of questions about their robo-taxis. They're supposed to be driverless now. They're not. They do have 10 billion plus full self-driving miles. It's going to be a big earnings report. The company slid for 8 straight weeks until last week finally turning it around. Evercore ISI added Arista Networks to its tactical outperform list ahead of the quarterly earnings on May 5th. I like the term tactical outperform. It tells me like, ooh, what's going to be happening here? In the short term, is there a trade? That's the implication. Analysts predict a top and bottom line beat, pointing to more AI demand and sustained traction on the enterprise front. The stock has been a winner in networking for some time because of how good its CEO is performing. Evercore kept its buy rating on the stock and a $200 price target. Google is in talks with Marvell to build new AI chips for inference. The custom chip giant still appears poised to benefit from Google's chip deployment for years to come. Broadcom disclosed in a regulatory filing that it had entered into a long-term agreement with Google to supply future generations of AI accelerator chips. That filing also revealed that Broadcom, Google, and Anthropic expanded a partnership that will see the Claude developer access 3.5 gigawatts of AI compute capacity beginning in early 2027. Marvell's reported new business would also be the latest in a series of wins for custom chips in general. NVIDIA, the most valuable chip designer and GPU specialist, is also a little lower in the trading today, maybe on that news, but maybe just a little bit of profit give back. So the reported collaboration between Marvell and Google, it is strategically important. It's still early stage, trying to rebalance power within the AI semiconductor stack. Google's pursuit of custom TPUs is less about outright replacing NVIDIA and more about selectively displacing it in internal workloads where optimization and cost control matter most, reinforcing a hybrid approach rather than a full-scale shift. For Marvell, the engagement signals growing traction in its custom AI silicon, a market that could become a meaningful growth vector as hyperscalers increasingly seek differentiated architectures. For NVIDIA, the development reinforces a longer-term risk narrative. While near-term demand remains exceptionally strong, the rise of in-house chips across major cloud providers introduces a credible pathway to incremental share erosion. Ultimately, investor focus should center on execution, specifically whether Google can translate silicon innovation into software adoption and measure cost advantages at scale. IBM is going to be added to Evercore's list. The tactical outperformance, a gutsy call. They report this week, so we'll know if they're right or they're wrong. And maybe they'll give you an idea of if they're right on IBM, then maybe they know something about Arista Networks. Elsewhere in the world, airlines are starting to cancel flights due to soaring cost of jet fuel. Dutch airline KLM reportedly canceled more than 150 European flights because it's no longer financially viable to operate them. The whole food chain of travel is being affected by this war. European countries, Asian countries are being affected by it that have no dog in the game, if you will, dog in the hunt for what's happening between Israel, Iran, and the United States. Let's talk a little history. The S&P 500 just notched its 3 consecutive up weeks with at least a 3% gain. This has happened only 2 other times in the history in the last 76 years. Both preceded extraordinary rallies. So when it's happened, according to ProCap Insights, these 3 weeks translate into something bigger. When this happened in September of 1982, the benchmark index returned 13% over the next 3 months, 25% over the next 6 months, and 34% over the following year. Paul Broecker had broken the back of inflation back in 1982. Interest rates were collapsing. Then it happened again in June of 2020. After those 3 weeks, up 3%, the index gained 7.3% in the following 3 months, 15.8% in the next 6, and 32% in the next year. Now, that happened to be COVID, and we know that there was a lot of bad information moving left and right. There was a lot of money shifting and a lot of new players coming into the stock market. The broader bull run back in 1982 went on to return 229% over 5 years, while the 2020 occurrence returned 114% over 21 months. Am I saying bet on history? Nope. Back in 1982, the S&P 500 traded at 10 times earnings. It had followed a decade of weak returns. In 2020, the index collapsed before reversing. It was 23 rough days of trading. So Friday's close at 71.26 hit an all-time fresh market high for the S&P 500. Will history repeat itself? Uber Eats is going to pick up customer returns for purchases made through its app from retailers like Best Buy, Dick's Sporting Goods, and Petco. Kering, which is Gucci's owner, is partnering with Google to release AI-powered glasses, the first luxury brand to put its logo on smart glasses. There's a upcoming movie, and I would say it like this: lights, camera, AI. It's called Bitcoin Killing Satoshi. It's the first big budget film to rely heavily on AI-generated imagery, slashing production costs from $300 million to $70 million. Wall Street's all about product. Kraft Mac and Cheese, they're going to come out with a restaurant edition trying to bring premium flavors to affordable meals. The lineup includes Parmesan pesto and Monterey Jack caramelized onion. But the brand tested 40 plus flavors to get there. My kid loves mac and cheese. Canadian Prime Minister Mark Carney said something pretty interesting over the weekend. He said the U.S. economic ties are weaknesses to be corrected. His assessment came in a YouTube video, which the Prime Minister said was intended to speak directly to Canadians about the challenges the country faces. The U.S. has fundamentally changed its approach to trade, raising its tariffs to levels last seen during the Great Depression. On Friday, U.S. Commerce Secretary Howard Lutnick said they suck in reference to Canada while speaking at a conference. The United States, Mexico, and Canada, the agreement, which replaced NAFTA, is due to be renegotiated by July. Ford CEO said something interesting about Tesla. He said he chose to test drive a Xiaomi and not a Tesla because the latter doesn't have an updated vehicle. Tesla doesn't have an updated vehicle. Now, the Ford CEO, what the heck was he doing driving around a Chinese car for 6 months? And that's the most anti-born in the USA Bruce Springsteen thing I've ever heard from a U.S. company. But he was on a podcast, and he was asked why he had driven a Xiaomi SU7 EV in 2024 rather than a Tesla to gauge the competition. He replied that to beat China in the car business, he would not necessarily focus on Tesla. Nothing against Tesla, he said. They've been doing great, but they really don't have an updated vehicle. He said Chinese car brands like BYD are the best of the business, considering their cost, supply chain, and manufacturing expertise. He says, now, if Ford's smart, we'll take the cost competitiveness of BYD and then compete with that platform in parts of the market where we know our customers really well. The next cycle of EV customers in the United States that want pickups and utilities and all these different body styles, but they want it at $30,000 to $50,000 like the first inning. They want it affordably. Farley said China's progress in automobiles is something to be feared and respected. In 2024, he said in a podcast interview that he had been driven a Xiaomi SU7 for 6 months and did not want to give it up. That's pretty damning. Fermi is one of those companies that is supposed to be making nuclear sites. They're down 18% today, 20% at one time. CEO Toby Neuberger and CFO Miles Everson departed the company. CEO left on Friday. The CFO left this morning. It's a pretty big management shakeup. If I was a shareholder, and I'm not, I'd be peeing my pants right now. Fermi, which was co-founded by former Energy Secretary Rick Perry, plans to build nuclear and energy infrastructure to power data centers, but the cost to build out its power site is mounting, while it still doesn't have any customers secured. Fermi announced that it had entered in a non-binding letter of intent with a tenant to lease a portion of Project Matador power grid site in Amarillo, Texas. That contract was terminated in December. The company, which went public in October, is down over 75% from its IPO, and it smells of disaster. Coming up, I'm going to be talking about what you do 10 years from retirement, or what I've been doing 10 years from retirement. Let's take a break here. We'll be right back.
Visit The Rob Black Show online at robblackshow.com. Listen to archived podcasts, market updates, and information from EP Wealth's certified financial planners online at robblackshow.com.
I've been in financial planning and investment advisory, radio and television for 30 years. And one thing I've always done with media was be honest with you. Now I'm in the final 10-year countdown to retirement, and I want to share my life, my money, my family, what I'm doing. By 2030, 1 in 5 Americans will be retirement age. I'm in the final stretch of my rat race. I'm in my mid-50s. I've been working since I was 14, first jobs, early mornings, figuring things out as I went. The path turned into a 30-year career in radio, television, and financial planning. I spent decades talking about markets, money, risk, and retirement, usually for other people. Now I want to talk about me. At home, it's me, my wife, my boys. They're going to be 16 and 18 years old this year. I got a dog named 0110101. We live in California, which has been both a blessing and a balancing act financially. Over time, we've built some meaningful wealth, tens of millions of dollars. On paper, that sounds like the finish line. I'm beginning a very different phase now, one that's less about accumulation and one that's more about intention. I'm probably about 5 years away from retirement, give or take. Close enough to see it clearly, far enough that I can still get it wrong if I'm not thoughtful. So this isn't a generic checklist. I'm going to go over what I'm doing, how I'm thinking about the final decade before stepping away. Some of these I've already done because, like I said, I'm maybe 5 years out. With 10 years left before you think you're going to retire, that's when you want to start to save as much as you can. Starting at age 50, you can contribute more per year to tax-advantaged retirement plans. These catch-up contributions for older workers can juice your savings. The IRA contribution limit for both traditional Roth and Roth IRAs combined rose to $7,500. If you're over 50, you can add an extra $1,100 catch-up contribution, pushing your max to $8,600. 401k contribution limits, similar to 403bs and 457s, you can now contribute for $24,500 in 2026. But there's also a super catch-up rule. If you're 60 to 63, you can contribute an extra $11,250. For workers 50 to 59, you can contribute an extra $8,000. It's a good time to max out what you can. This stage for me is really mental. That 10 years out, because my number's already there. What does my life actually look like when work is optional is my big question. I've started having these conversations with my spouse. One of us leans towards retirement looking like travel and spontaneity and flexibility, whereas I value routine, community, staying grounded, and visiting my kids. Neither is wrong, but it takes effort to align. My boys are 16 and 18, right on the edge of adulthood. Their next steps will shape ours more than we probably realize. Where they go, what they need, how independent they become, all of it factors into what retirement looks like for us. So this phase is less about spreadsheets and more about imagination. It's about designing a life we both want to live. And honestly, at times I don't think we're going to want to be together because we have very different ideas. 9 years out, start to respect risk. Even if you've already won the game, start learning what allocation is. If there's one thing I know after 30 years in the market, it's that success can make you overconfident. With tens of millions of dollars in stocks, I don't need to take big risks anymore. The math works, the plan works. But the instinct to keep pushing, that doesn't just disappear. Always another opportunity for me to find out there. Another trend, another can't miss idea. And when you've been around markets long enough, you can make a convincing case for almost anything. That's where discipline has to come in. This isn't about abandoning stocks. I still love growth stocks. It's not about becoming ultra conservative overnight. I'm not going to all cash. I'm not going to all bonds. It's about recalibrating the purpose of my portfolio. Earlier in life, risk was a tool for growth. Now risk is something to be managed carefully because the stakes are different. A major drawdown at 40 is frustrating, but you have time, income, and energy to recover. A major drawdown at 60, that can change how you live. So I'm asking a simpler, more honest question to myself. What allocation lets me sleep at night, regardless of what the market does tomorrow? I stay away from high-risk investments and strategies such as crypto, options, or day trading. They're more likely to blow up in your face than to pay off. Watch out for unscrupulous companies that prey on fears about not having enough saved for retirement right around this age. With 8 years out, you need to clean up your financial junk drawer. Accounts from old jobs, investments that made sense at the time, positions that were once exciting, they now just sit there. I've seen people with portfolios literally on 100 stocks. And I'm like, you got to start trimming that. You don't have time. Get rid of the losers to get some tax losses going. I was able to find some old accounts that I forgot about. Even if they were small, like I was goofing off and putting $10,000 into Robinhood to see what the interface looked like. Roughly 31.9 million forgotten 401ks holding an average balance of $66,691 is out there for you to find. So with 8 years out, try to start simplifying. Not because you have to, but because clarity matters more as I get to retirement for me. I want everything organized. I want it intentional. I want it easy to understand, especially if I have a heart attack and die. This is my stage where I've already consolidated, I've cleaned up, and I've made every dollar have a purpose. There's nothing idle. 7 years out, I'm building the retirement budget. This is where you have to start replacing your income, thinking about it. It's easy to imagine retirement as a highlight reel, travels, hobbies, freedom. But the real version includes all the ordinary stuff as well. Healthcare, especially in California, it's a major line item. Factor in what you'll owe for Medicare Part B premiums, which cost $202 per month in 2026 and usually go up each year, matching rising healthcare costs. Taxes don't go away because the paycheck does. Lifestyle costs tend to creep higher than expected. Have you seen the cost of airfares recently and hotels? My boys are close to launching, but they're not fully there yet. And like most parents, will probably help more than we initially planned, whether that's education, housing, or just giving them a softer landing after college. I've seen this play out with clients. They underestimate this phase, not dramatically, but just enough to create stress later. With 6 years left, turn assets into income. $1 million should pay you roughly $40,000. My spending now is roughly $400,000+ with 2 kids in private school and college costs coming up. I want to replace that when I retire. So 10 million is my ballpark for equities to have dividends or maybe bonds to have yields. But right now my stocks all yield less than 1%. So I'm not there. But I have started buying dividend stocks like Caterpillar that I want to be able to give to my kids while the income supports me in my life. I get dividends from stocks. I get income from real estate. I get strategic withdrawals that could be sustainable. I use an option overlay strategy for my high concentrated positions in Apple, Microsoft, and NVIDIA. So it's not just about maximizing returns anymore. It's about creating consistency, a reliable income. Because in retirement, cash flow is confidence. With 5 years out, start making the big decisions. When do I actually think I'm going to retire? This is the stage I'm at right now. Do I fully retire or just evolve into something lighter? Do we stay in California? Do we travel the world? Will she travel with me or not? I don't know. There's a lot of questions. We've been so focused on our kids. So I'm starting to think about when I'm going to take Social Security. If I take it at 62, which is when I can, I'd receive roughly, as an example, $1,400 a month. But $2,000 a month if I take it at 67 and $2,400 a month if I take it at 70. I've gotten rid of all my high interest debt. Never really had it in the first place. I want to walk away completely knowing that my money's working efficiently. With 4 years out, the mindset shifts again from building to protecting. This includes reviewing insurance coverage. If you plan to retire before qualifying for Medicare at 65, how are you going to maintain your healthcare insurance? COBRA? Think about long-term care. Start structuring assets efficiently. Make sure legal documents are in place. With a family and significant assets, the goal is simple. Make sure nothing avoidable can go wrong. This is the years of insurance, the final 5, with 4 years left out. With 3 years, I think I'm going to start test driving retirement. But first, before I do that, I'm going to review my estate plan to make sure that my money passes efficiently to charitable causes and to my children. If you own a house in California, you should have a trust. You can save money on estate planning. These instructions override your will. If the wrong person, such as an ex-spouse, is listed, he or she will inherit the accounts when you pass away instead of your preferred heirs. I had to make sure that all the previous girlfriends were off all the documents. But I also have a trust, and my trust attorney works closely with my financial planner at EP Wealth. One of my wishes in retirement is I want to retire into a version of the life that I've never lived. I want to teach, and I want to travel, and I want to eat well in other countries. I'm a big fan of aglio e olio. So 3 years out, I can try to go to Italy and see if I really want to do that, because I know no Italian. I have to test it. I definitely know that I don't want mountain snow, maybe mountain springs, but not mountain winters. With 2 years out, I'm doing my final stress test. What if the markets drop significantly? What if inflation sticks around longer than expected? What if health issues arise? After 30 years of building plans for others, I owe it to myself to be just as rigorous with my own. No assumptions go unchallenged at this part. I have to figure out Medicare Part B, Part D, I got to figure out with my income expectations on my tax returns. I'm probably going to get hit some IRMA charges. IRMA eligibility is determined by Social Security Administration. It's calculated on a sliding scale with 5 income brackets, topping out at $500,000 to $750,000 for individual and joint filings. And in my final year, I want to land the plane. But honestly, I'm probably going to work a little bit till the day I die because I like it. Then again, a stroke or a heart attack can change everything for me. So that final year before you retire, it's all about transition. It's about setting expectations. My boy's stepping into adulthood. Fingers crossed, maybe I'll be a grandfather one day. That means shifting financial responsibility gradually, even if it's uncomfortable at times. I have a financial planner because when in my 70s, I don't expect to have as good of a mind as I do in my 50s. I want a sustainable life. Retirement isn't about becoming the safety net for everyone forever. The final thought here is it was never just about the money. After 30 years of talking about money, I can say with complete clarity, the financial part is only one piece of the puzzle. The real work is staying connected with my wife as life changes, letting my kids become independent, reducing my sense of purpose beyond work, and figuring out what a random Tuesday looks like when no one is expecting me to be anywhere. Because if I get that, if life works, then the money simply did its job. It got us here.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.